And in our top business story, the UAE Central Bank has announced that as of today, Thursday, December the 15th, it has raised interest rates applied to its certificates of deposits. According to news agency WAM, this comes in line with the increase in the interest rates on the US dollar, following the Federal Reserve Board's decision to increase the federal funds rate by 25 basis points at its meeting on December the 14th. Certificates of deposit, which the Central Bank of the UAE issues to banks operating in the country, are the monetary policy instrument through which changes in interest rates are transmitted to the UAE banking system. Economists were quoted in local reports saying that the prospect of further increases in US rates next year will complicate efforts towards economic growth and will be an additional headwind at a time of tight liquidity, which will affect the region. And on the other hand, the UAE is on track to emerge as the best performing economy in the region in 2017-2018. That's according to the latest outlook. The forecast from Capital Economics states that overall, while the average growth in the region is likely to weaken to 1.5% next year, the UAE, however, should embark on a gradual recovery in the coming quarters and is likely to be the best performing economy in the Gulf in 2017-2018. Sultan bin Saeed Al Mansouri, the cabinet member and UAE Minister of Economy, stated that the UAE's GDP has tripled in the past 10 years, climbing from almost 511 billion dirhams in 2006 to 1.5 trillion in 2015. The figure is expected to reach 1.8 trillion by the end of 2016 and triple in 10 years. While the non-oil sector's GDP contribution in 2015 rose to about 77% at current prices and 70% at constant prices. Capital Economics noted that dollar pegs in the Gulf would remain in place, but that means policymakers will be forced to follow the US Federal Reserve and hike interest rates, and that Saudi Arabia and other regional economies are likely to see subdued growth for most of the year. Only 28% of respondents in the UAE have insurance to protect their income should they become ill or disabled, and nearly 1/5 have coverage in case of premature death. That's according to the latest report. The Zurich Insurance Group and the Smith School of Enterprise and Environment at the University of Oxford issued the results of a global study on income protection gaps, which also included the UAE. Just under half, at 49% of Western expats in the UAE and about a third, at 34% of Asian expats, had income protection, while only 14% of UAE nationals and 13% of Arab expats were covered. A third of respondents claimed that they would be willing to consider buying insurance and pay an average of 6% of their monthly income for it, while a perceived high cost of protection was the consistent reason given for being unwilling to consider buying insurance across all countries. 31% of people believe that protection insurance costs are higher than they actually are. The average critical illness cover Zurich International Life Middle East recommends for a young family is a 5 to 8 times multiple of annualized income, and life insurance cover is around 20 times. This is a 3.5% of the annualized salary and is therefore lower than the percentage of income that individuals are willing to spend on income protection. UAE-specific results of the study show people are more influenced by those who have suffered a more life-threatening case, such as a stroke, cancer, or a heart attack, making up 40% of reasons for income loss, than by those 26% who have experienced a loss of income due to stress or emotional causes. The National Bank of Abu Dhabi has successfully closed the syndication of its $2 billion club loan facility with a large oversubscription. Commitments of nearly $3 billion were received in syndication from 14 major international banks across Europe, Asia, and the US. However, according to a statement, due to its excellent liquidity position, NBAD will not be increasing the facility's size, and banks' commitments have been scaled back. Stephen Jordan, the group treasurer of NBAD, was quoted saying that they are very pleased with the success of this transaction, which again serves to highlight the confidence in the creation of a larger, stronger bank through the merger of FGB and NBAD. Bank of China Limited and Macau branch Bank of China Hong Kong Limited are the lead managers.